So you're interested in war tax resistance, but you've discovered that federal income taxes are already removed from your paycheck. Perhaps it's even leading to a situation where you receive a refund each year, which means you're paying in more than you need to. So at the very least, you want to have the option of whether you want to resist those war taxes when April 15th rolls around. So if that's your situation, you found the right video. This video is about how to adjust your W-4 withholding. The W-4 is the form that you often fill out on your first day of work. It alerts your employer to the basics of your financial situation to determine how much federal income tax to withhold from your paycheck and send to the IRS or the Treasury Department. So this is because the W-4 form isn't a form that many folks are familiar with. How to fill out this form to give the opportunity of war tax resistance on April 15th is perhaps the most common question I receive by phone and by email at the NUTRIC office. So let's take a quick look at this form. So here's the form, I believe, is 4 pages. You only need to turn in the first page to your employer. So here, you'd obviously in step 1, part A, fill out your name and address, but it's in part C where we have kind of the first significant bit of tax information that your employer will use in determining how much to withhold. So your filing status, meaning whether you're single, married, filing separately, married, filing jointly. This lets your employer know what your standard deduction is going to be. And so it gives your employer kind of the first bit of information that they need. So to kind of do a very quick example, if you were going to, if through your employer, you were going to earn $12,950 during the year, your employer already knows that. So that it doesn't ask on this form how much you're going to make. It's not necessary information since your employer already has that information. But if your employer knows that you're going to make $12,950 and they know that you're single and you mark down single, such as this form does, then I kind of put down what the standard deduction is for each of those filing statuses. Your employer's probably putting this in a computer, or their payroll specialist or payroll company is doing this. And what they'll find is your projected income for the year is $12,950. You're single or married filing separately, so your standard deduction will also be $12,950. And so when you do your projected income for the year minus your standard deduction, that brings us to your taxable income. In this case, your taxable income would be 0. Therefore, your employer would not remove any federal income tax from your paycheck. So where it gets more complicated and where I'll usually get a question is if someone, in this case, let's say they're single and they know they're going to be making more than $12,950 during the year. So I'm going to have us switch the screen that I'm sharing, and we will move to what you need to know to figure out what number you need to put later in the document to kind of zero out your taxable income. So that's our goal. If you zero out your taxable income from your employer's perspective, then your employer will not withhold anything from your paycheck. So first, you need to know what your total yearly income would be. So here's an example. If you knew that if you know that you're paid every 2 weeks, which means you're paid 26 times a year, and you know that you're paid $15 an hour, then you just need to know what's the most hours you would work in a given pay period. If your hours are standard, then it's simpler. If your hours go up and down, you need to know what's the most hours you might work during a pay period. Because the computer programs that determine withholding aren't smart enough to realize that some periods you might make less and some you might make more. During the period that you make more, the computer program will assume that's how much you make all year long, and it'll give you a higher income than you're supposed to have, and it'll remove it'll take out money from your paycheck for withholding at a greater amount than anticipated. So let's just say during this 2-week pay period, 80 hours is the most you would work. So the simple math here, hopefully simple enough, is 26 pay periods times $15 an hour times the most hours you would work, 80. That means that the computer, during the time that you work those 80 hours during a pay period, will assume that your pay for the year will be $31,200. So before we go back to the form, let's figure out what your taxable income will be if you did nothing else other than mark that you're single. So kind of on the lower half of the screen here, this will be the number that you would want to put in deductions for B, which we'll get to shortly, but you'll take your total yearly income, which we've discovered is $31,200, minus your standard deduction as a single person. Means that if you did nothing else, the computer will anticipate your taxable income to be $8,250. So if you did nothing else, that's what the computer believes your taxable income would be. And then it would take a percentage of that to anticipate how much you would owe in federal income taxes. So if you want to zero out that amount, we're going to need to take that $18,250 and we'll go back to our W-4 sheet. And if we go down this first page, we'll find step 4. So step 4B is deductions. This is where you're supposed to put down anticipated deductions that you would normally take on your W-4. Legally, if you're a homeowner who has a home loan, this could be interest on your home loan, interest on your student loan. There's a lot of things that could legally go here, but to simplify things, you already know that if you put down $18,250, now when the computer goes through its calculations, it'll have your total income of $31,200. It'll subtract the standard deduction, and it'll subtract the line on 4B, and it'll say, oh, you have zero taxable income. At least that's what I anticipate. So we will not take any federal income taxes from your form. So it really is this easy. For some folks, that line that number you put in 4B, it could be higher, it could be lower, especially when it's higher. That makes some folks uncomfortable, but really most employers don't necessarily know what to make of this form either. They're just putting the numbers in their computer. On the off chance that an employer would ask you why that number is what it is, they actually don't have a right to know that information. That's your personal financial situation. But you could nicely say that my financial situation has changed. I've talked to the person that I do my taxes with, and they've suggested I put this number in. That should be more than enough to answer their question. While normally you only fill this out your first day of work, an employee can change this form at any time and has the option to submit an updated W-4, realizing that the employer has about 3 weeks to update it. So once you give this information, you might not see it reflected in your next paycheck, but depending on how often you're paid, by your second paycheck, it should normally have changed what your withholding amount is. Lastly, this is illegal. So let's be clear. This form of resistance, by altering your W-4 form with deductions that you actually don't anticipate having, it is an illegal act. And by law, it is punishable by up to a year in prison and a fine. That was enforced a few times as this W-4 resistance became popular during the 70s, but it has not. We haven't seen this law enforced or used to penalize a war tax resistor since 1975. So the risk is very low. Normally, if the IRS takes any action, it might be that they may garnish your wages at some point, but even that has become the exception rather than the norm. They are not there with their lack of funding. They're rarely garnishing wages. And the other action that they may take, but again, it's very rare, is they may contact your employer and ask them to adjust your W-4. If that would happen, please contact the office, because then they might take too much. You do have, they do give you a small amount of time to reply to make sure that the number isn't too drastic a change. Also, this video is meant to be kind of a helpful addition to the resources we already have. So in the description for this video, I will put links to 2 other resources. One is a short 8-page booklet that we have on W-4 resistance that goes deeper into all the issues I talked about. And the other is a 1-page 2-sided flyer that goes much into what I talked about, because it's very brief and just meant to be a kind of a quick reference for folks who are looking to resubmit or fill out their W-4 at a new job. So, but if you have any questions, please always feel free to contact the Nutric office. And please check out our website, where we have a variety of resources, all available for free on a great variety of topics. Our website is nwtrcc.org, nwtrcc.org, but I'll also put that link in the description. Again, thank you for watching this video and taking this form of peacemaking so seriously.